Maverick traders. Welcome out to your market roundup for May 22nd. Corey here with you. As always, let's jump in and take a look from kind of a top-down approach, starting with the Dow, S&P, NASDAQ, and such, and a little bit of a mixed bag. The Dow was slightly negative, S&P flat, NASDAQ slightly positive, but we continue to see this rotation into the more beaten down names, and that's that branching out of this rally. So large cap tech certainly led the way. Google, Apple, Amazon, and so forth certainly propelled us higher, maybe more so Microsoft and some of those than any others. But now notice the small caps playing catch up. Notice a 1% day. So we're branching out. We're getting a little bit more robust in the rally. Oil and gold flat on the day. Daily news, Chevron buying out renewable energy company REGI, and debt limit negotiations continue. That's going to continue going forward. It's going to be pushed all the way into that deadline, but ultimately there will be a resolution to this. It's just the way it goes. So advanced decline line, about 60% of stocks going up, and the 50-day moving average continues to improve. Now more than half of stocks are in an upward trend. So the S&P, we've had this cup and handle pattern intact. I first highlighted this and personally bought right in here. I did not expect a retest. We talked about it when that happened. That was kind of a, hey, this is a key level. It better hold or the market's got a problem. It held just fine. Very next day up big. And we've now broken out of the cup and handle. Everything looks good. We've expected more upside. We're getting more upside. The next move is probably a big blow off top. Now, sometimes I wonder if people get a little bit bored because oftentimes you're talking about the same pattern for a while. But as long as you can identify, you can see it, you can profit from it. So it shouldn't get too boring talking about this because it continues to work. Eventually, we'll transition over to new things. If indeed that blow off top happens, then we'll be talking about the blow off top for some time and how you need to adjust, shift the portfolio, get a lot less bullish, take profits on a lot of things, maybe even go net bearish potentially. We'll see. But ultimately, we're in that pattern. I'm looking for a big run higher, and I kind of picture it in my mind as a runner that's sprinting for the finish line. So look for a big explosive move, look for the last gasp rally, and maybe big gaps in the air, increased volume, that sort of idea. As we look at the NASDAQ, continues to push higher. It has outperformed, but do you want to put new money to work in the NASDAQ? Do I think that it continues to outperform and goes up 10% where the other sectors go up 5 or something in the short term? I just don't think so. I think it makes a ton of sense to look at that branching out, that market breadth as they call it, look for the other areas of the market and expand out that way. On the heat map, we've got a couple of names in the brighter green. Pfizer had some news today that perhaps a weight loss drug is revolutionary and so on. Consumer defensive, this is the worst performing sector. Money coming out of defensive names and into a little bit more risk on type of approach. And in fact, some of the most aggressive names, the snowflakes and those of the world, sharply higher today. So let's continue to look at the markets through that bullish lens and think about what that means for trades. And from this point, I do think there's a little more upside in the short term. So I would look at it as short-term bullish, intermediate term, meaning where do I think we'll be 3 or 4 months out? Well, probably bearish. And so, pick your spots carefully. Here's Hewlett Packard. And one of the things I like about this is it's old tech. Old tech versus new tech, right? Old tech is starting to play catch up a bit. You're seeing some stocks. We've highlighted Oracle a few different times. Here's old tech. Dell has been a performer. Hewlett Packard lagged a little bit to Dell, but sort of a cup and handle-ish, and ultimately should be an area where some money rotates. So I'm not a huge fan of tech in general, but if I were, I wanted to highlight something in older tech, which would be more intriguing to me versus newer tech. Mercado Libre, we've talked about the last couple of weeks. Not surprising that we're starting to maybe break out to the upside. Tomorrow could really accelerate, and international stocks we continue to like. We highlighted Japan and some of those areas of the markets for the past few weeks. And then last, some of these stocks, I mean, I've been highlighting Royal Caribbean and Carnival Cruise, and they continue to outperform. Look at Royal. Broke out, kind of the retest, held, continues to accelerate. I don't know that I'd buy it right here today, but on a little pullback, it probably accelerates further. Looks like an area of short-term strength. Now, on an intermediate basis, I'd rather be a little bit more bearish, looking for things that look like they can go considerably lower in the coming weeks and months. Abbvie has broken down, kind of retesting the old breakout zone. And I always look at support and resistance, not like it's a big cement area. It's usually more like a mattress. So you break through and then you kind of push up into like a trampoline, right? The trampoline gives and then it springs back. So we're kind of coming up into the prior breakout zone and then we fall. It's not surprising that it's kind of coming up and pushing into it like a trampoline and then springs back down. Abbvie, ABBV looks bearish. Here's CF Industries, Mosaic and Deere, and some of those that we've been highlighting in this same space have trended lower for the past few weeks. And CF Industries, again, it's in that kind of fertilizer, that industrial space. It just doesn't look right, doesn't act right. I would anticipate more downside is coming. Last but not least, Wynn Resorts. Now, this one I actually already have a position in and just entered into it. And I think it's a pretty nice setup. So we have a trend line break. We've got a downtrend in effect, lower swing highs, making a lower swing high there versus the prior highs. And we've already made the lower lows, right? So lower highs, lower lows, broken trend line, the retest underneath, and a bearish engulfing formation. I went ahead and pulled the trigger today and entered into a bearish position in Wynn Resorts. Cup and handle is still intact. We're marching higher, and I would be looking for that blow off top. I think it's coming. And when that happens, we'll stop talking about the cup and handle and now talk about that we've been in an exhaustion high and that we're likely to see lower to neutral type of prices for the next while. And I'm worried that there's considerable downside, that we could see a few months of pretty heavy selling later this year. But first things first, we have been bullish in the shorter term and it's been working, sticking with that for now. Core PCE on Friday. Earnings reports wise, we've got Costco, Intuit, Lowe's, Nvidia, Palo Alto, Snowflake, VMware. I don't remember. I thought it was Snowflake that was up pretty nicely today, but actually I think Twilio was the one I was thinking of. Hope you've enjoyed the market roundup today. Have a great rest of your day, and we'll see you next time.